is they try to have a happy ending to the week. And it's starting to seem like that it's getting more and more difficult to do this with the market. We know the stock market is completely manipulated. It has nothing to do with earnings. It has nothing to do with how corporations are doing. It has to do with the free money that the Fed is pumping into the market, because there are many, many individuals out there saying that the market doesn't even make sense anymore. But we can see after 3 days of slamming down gold, they had a very tough time bringing gold down, and we can see today that gold is holding steady right now. And this is very interesting because in the past they used to throw thousands upon thousands of contracts at gold and gold would come right down. But it seems like this is not the case anymore. I mean, does it mean it's not going to happen? No, we're going to have to see as time goes on, because like I said, if we go into May, into June, into July, and they try to slam gold down again, and it doesn't move, and it increases by, say, $20, $30, $40, $50, we know right there and then that is a sign that they cannot bring gold down anymore. They're losing control. And this is something that we need to watch. Now, there are other people out there, and they're saying, no, gold is going to be going back down to $1,150, $1,000. But after the 3 slam downs, one right after another during this week, you would think they would have hit that number already. And that just didn't happen. So we're going to have to watch that very, very carefully, because we can see that anything can happen right now, because we are in a period of complete chaos. But we can see the economy is still breaking down. Out in the UK, retail sales, they have fallen by 1.4% during the first 3 months of 2017, and they're expecting the next month, well, it's not going to get any better whatsoever. Now, this is the biggest quarterly fall since 2010. And we know what happened during that period. We were in a recession, the Great Recession. Out in Spain, things do not look good for the people there. Now, we know the stock market is doing very well. It's staying up. We know the stock market in Europe is doing very well. But the economies of these countries, they have been declining for a very long time. Euroactiv reports the proportion of children living below the poverty line in Spain has increased by 9 percentage points between 2008 and 2014 to reach almost 40% already. And Spain has the EU's 3rd highest rate of child poverty after Romania and Greece. And as child poverty continually rises, we can see the sharpest increase, which is about 56%, was among households of 4 people, 2 adults, 2 children, living on less than 700 euros per month, or 8,400 euros per year. And Spain, well, they have the 3rd widest gap in the EU, behind Latvia and Cyprus, between the levels of social protection offered to children and people over 65. Spanish poverty rates across the whole nation remain very extreme right now. So things are not improving out in Europe. Actually, we can see that things are actually deteriorating out in Europe, and it's getting worse and worse for the people. Here in the United States, well, we see the economy is completely breaking down. Now, we get a report that existing home sales, they have soared to 10-year highs, and they dropped in February down to 3.9%. And what's very interesting is that mortgage rates have ticked up a little bit, and they're telling us that existing home sales, well, they have increased by 4.4%. But when we look at this very closely, we see that these are in the hot cities. And when I say hot cities, I mean these are the bubble cities, the bubble areas where they've been pushing the bubbles higher and higher. And this is where hedge funds, investment companies, foreign investors, speculators are all in these areas pushing real estate up and buying homes. Now remember, people are writing in saying, well, I don't see anything in my town. It looks like things are going really well with real estate. And then other people are writing in saying, well, it is a complete disaster where I live right now. Real estate is dropping. Jobs are very hard to find. This is what happened during 2007, 2008. And I've said this before, back during that time period up in the state of New York, well, we saw real estate start to drop off. And when we spoke to other individuals like in Florida and other areas, they didn't really see anything. Actually, things were still booming. And what happened was, as time went on, 6 to 8 months later, all of a sudden, those areas were hit. And what's very interesting about this, those areas that were last to get hit were the areas that got hit the hardest. And this is what we're seeing right now. We're seeing many different areas in the country where all of a sudden things have just completely dropped off the cliff, and other areas where they're in there, like, Arizona, where they're out in San Francisco, in Texas, Miami. They're still trying to keep these bubbles up, and they're still trying to pump them up. But we're seeing breaks in the bubble, like in Miami, out in New York area, in San Francisco, and some areas are still holding. But eventually what's going to happen, it's going to hit all different areas at the same time. And when things come down, it's going to be absolutely awful. Just think about what happened back in 2007, 2008, when you saw those pictures of those individuals in California just leaving their houses, and people were scratching their head going, wow, California really has it bad. They have all these rows of homes. People aren't living in their homes anymore. They just left their furniture. They left everything in there. Thank God it didn't hit my area yet. And then all of a sudden, it did hit your area later on. Now we see the market's PMI survey for manufacturing and services. Well, that plunged back below pre-election lows. And we're starting to see this with different sectors of the economy right now, where they're going back to where they were prior to Trump. And we knew this was some type of dead cat bounce because the economy has not changed at all. It is exactly the same. No new jobs were really created. Manufacturing has not been brought back to the United States. The Fed is still creating currency. The Treasury is still borrowing currency. China, Russia, and many other nations are still selling treasury bonds. And we could see right now that nothing has really changed in the economy. Actually, the debt has increased. That's what's changed. The economy has gotten worse. That's what's changed. The Fed has started raising interest rates to bring down the economy. That's what's changed. And we see right now that Fed Fisher, he is out there saying that, yes, the economy has some weak growth right now in the first quarter, but this is temporary. And interest rate hikes should be able to proceed as planned because we don't see the economy being weak like this any longer. It's going to all of a sudden improve in the second, third, fourth quarter. So interest rate hikes, guess what? They're still on the table, and we're going to raise the rates. Now, of course, he's saying this, and they know for a fact that this economy is not just going to turn around. They know that, wow, all of a sudden as the second quarter hits, all of a sudden we're going to have 3-4% GDP. No, completely impossible. But they're saying this because they want to raise the interest rates. Every time they raise it, it's another notch which allows them to bring the economy, slow it down, and crash it. This is what happened in 2006, 2007. They started to raise the interest rates, and when the housing market started to break apart, companies started to fold, all of a sudden, they started to bring the interest rates down once again because they already got the result they wanted, and they knew it was a domino effect, and it would just keep going after that, and it didn't matter where the rates went. And they knew that things would rapidly fall apart. They're doing the same thing once again. Now, billionaire investors, they are out there. One of them is Paul Tudor Jones, I should say, and he has a message for Janet Yellen and other investors. Be very afraid. And we can see it's not just him. Guggenheim partner Scott Minerd said he expected a significant correction this summer or early fall, citing as potential triggers President Trump's struggle to enact policies, including a tax overhaul as well as geopolitical risks. Philip Yang, a macro manager who has run Willowbridge Associates since 1988, sees a stock plunge of 20 to 40%. Seth Klarman, who runs the $30 billion Baupost Group, told investors in a letter last week that corporate insiders have been heavy sellers of their company shares. That's a sign that those who know their companies the best believe valuations have become full or excessive. Larry Fink, who's running BlackRock Inc., oversees $5.4 trillion, mostly betting on rising markets, acknowledged this week that stocks could fall between 5 and 10% if corporate earnings disappoint. Another multi-billion dollar hedge fund manager, who asked not to be named, said that rising interest rates in the U.S. mean fewer companies will be able to borrow money to pay dividends and buy back shares. About 30% of the jump in the S&P 500 between the third quarter of 2009 and the end of last year was fueled by buybacks, according to data compiled by Bloomberg. The manager says he has been shorting the market, expecting as much as 10 to 40% correction in U.S. equities this year. So what are we seeing here? We see individuals that handle billions and billions of dollars, who are billionaires themselves, saying something is going to happen this summer or fall, which correlates to what Cliff High has said, where he says things are going to rapidly change come this fall. Charles Nenner, Harry Dent, David Stockman, and many others who use different types of analysis are saying the same exact thing, that something is going to give and the entire system is going to completely collapse. And we see right now that things are about to collapse. The economy is getting worse and worse. The debt level is continually rising. The economic indicators that we've been looking at are flashing warning signs all over the place. And Paul Tudor Jones, who runs the $10 billion Tudor investment hedge fund, says that years of low interest rates have bloated stock valuations to a level not seen since 2000, right before the NASDAQ tumbled 75% over 2+ years. That measure, the value of the S&P relative to the size of the economy, should be terrifying to a central banker. And this was all said in a closed-door Goldman Sachs Asset Management conference, according to people who heard him say this. So this tells us that things are rapidly changing. And we can see from the signal from the Fed how Trump flip-flopped about interest rates and about a strong dollar, wants a weak dollar, wants interest rates to go lower. We can see there's a battle on who is going to be blamed for this complete collapse of the system. And the Fed wants a controlled collapse. Trump and his team wants a controlled collapse, and they're starting to blame each other right now. And we can see right now that everything is in motion. And this is why everyone needs to be ready for what is about to happen. And I've said this many times before, and we can see just from the geopolitical events that are occurring right now and the economic events that are occurring right now, we can see that we're heading down this path, and it looks like we're on the path to a complete collapse of the system. All the promises of jobs coming back, manufacturing, that is not going to happen. Reducing the debt, not going to happen. All this stuff is not going to happen, because when you look at a corporation, and the corporation is in a huge amount of debt, and they don't have revenue coming in to pay for the interest on that debt, and you're spending a lot more than you're taking in, and the situation gets worse and worse year after year, there's only one course of action, and that is a default. That is bankruptcy. That is, we need to clean house and get rid of all this so we can start over. And this will be painful. This is not a fun thing to go through. And we can see right now, this is where we are headed. And this is why you need to have cash on hand. This is why you need to have some gold and silver. If you like Bitcoin, I would get some Bitcoin. If you don't have food, water, supplies, you need to get this. Why? Why do you need to get this? Because once this occurs, we're going to see inflation. And you don't want to be going out there with your paper and ink in the beginning and pay, an enormous amount of currency to get these supplies. If you get them now, it will be much, much cheaper. Plus, you don't want to run to the market and fight the individuals out there trying to get the same exact thing. And eventually what's going to happen is credit's going to freeze, deliveries to the stores are going to freeze, and you won't be able to get anything there. And we will see riots in the street. We will see people panicking. It's going to be a complete disaster. This is why you need to get ready and prepared for what is about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.